Hi, everyone. Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for analyzing and identifying digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. Hey everyone, it has been an interesting week in the market. Not a ton going on an individual token level, although I've got some interesting ones to talk about with you guys today. I think all eyes were on the Federal Reserve, which hiked interest rates 25 basis points as expected. And now a lot of people are looking to see if the Federal Reserve will change its tone going forward. Other interesting stuff that has gone on this week is Coinbase officially launched that derivatives exchange offshore, and Gemini also announced that they're going to be launching their an offshore derivatives exchange. So it seems that that market is ripe for the taking. We'll hopefully have more to report as some of these developments go on. But let's get into some tokens for this week. So first up, I'm going to talk about Sui. So this was probably one of the most talked about tokens this last week. So Sui is a layer 1 blockchain. It uses the Move programming language, and it launched its mainnet this morning. I unlisted the token on Binance. So the launch has been pretty highly anticipated since Miston Labs, which is the company behind Sui, raised $300 million at a $2 billion valuation last fall. Massive amount of money. Also, if everyone remembers last fall, not really the greatest environment in crypto before FTX, but after Luna and Three Arrows and Celsius. So definitely not good timing. So the project unfortunately did disappoint the community quite a bit as they opted to hold a public sale instead of an airdrop. Again, kind of unusual. Airdrops have definitely been the norm as of late for these newer tokens to start getting distributed. On the flip side, it maybe keeps your user base or your holder base from selling super soon. So we began trading this morning. It was also listed on Kraken, Huobi, all the other major exchanges that are international. So it began trading this morning above $1, but it has since decreased. The numbers are actually very different. I have anywhere from 37 to 70%, depending on which exchange you look at. But it's basically settled at about $1.35, representing a fully diluted valuation of over $13 billion. So not a bad step up from the round last fall that all those investors invested in. So this was definitely not, a great sign for the market. Nobody wants to see an initial listing just go down like that. But I guess we'll see. This is a very well heralded project. We'll see what gets built on it. But like I said, all right, next up we have Blur. So I've talked about Blur before. I think it's the NFT marketplace that has definitely been this up and comer in the last year. They did their airdrop a couple months ago. So they announced on Monday that they're going to launch they're launching Blend, an NFT lending product with perpetual collateral. So what does this mean? So the new product doesn't use price oracles and it doesn't have expiration dates. So in other NFT lending protocols, you basically what happens is, say I have some ETH I want to lend to somebody. I would go to one of these protocols. I would loan my ETH. And then I would set the terms, including the expiration date on the loan. So with Blur's product Blend, it's still peer-to-peer. And basically what happens is that lenders and lenders still set the interest rate, but the borrowers can repay the loan at any time, and the lender can choose to unwind the loan by activating a Dutch auction for other lenders to basically pick up this loan. So pretty interesting product. The caveat to this, I guess, is that it's much more friendly to lenders. And there could be some interesting things to see with the kind of unlimited timing on these loans. So Blend does also have a built-in fee switch, which can be turned on after 180 days. So a built-in fee switch, Uniswap, for example, has something like this, and it's the ability in the code of the product that you can turn this on and start collecting fees that you set. So as a reminder, Blur doesn't take any fees still on trading of assets on their exchange, which is why it has gained so much traction. Potentially this lending product might be where they start to gain some revenue. So the lending protocol currently is only available for certain NFT collections, but so far in the last 2 days since it launched on Monday, it's seen about 25 million in loan volume, while other lending marketplaces have done about 6.8 million in aggregate volume during that time. Even with all this, Blur is down 12% for the week. All right, last up we have Axelar. So cross-chain bridging project Axelar announced yesterday it was going to be supporting general message passing between EVM and Cosmos chains, allowing composability between the two. All right, so I'll try to break this down a little bit further for those who are not familiar with all of the verbiage there. But basically, Axelar is its own layer 1 blockchain, but it's designed to help with like bridging and basically communication between blockchains. So currently there's 2 projects on the Axelar blockchain that assist with bridging, but it hasn't had the abilities so far yet. So the basic bridging is just like, hey, I'm going to send assets from this chain to this chain and back. Now the idea is like you have general message passing, which means that there's just more ability for blockchains to communicate back and forth on certain things. So I know it sounds really odd, but basically you're like, there's a difference between sending information versus sending assets. So, and then basically Cosmos-based chains are very different in architecture and language than EVM-based chains. EVM-based chains, Ethereum virtual machine-based, or things like Ethereum, Avalanche, any of the other kind of like major layer 1 blockchains you might have heard of. So this is a big move for Axelar. Already a bunch of Cosmos-based projects have said they're going to be building this new feature including Osmosis, Neutron, Persistence, Saga, Secret, Squid, Stride, and Umi. So yeah, this hopefully will allow for better composability long term. I know this is a very deep infrastructure play, but super exciting. And the market thought so too. Axelar is up 15% for the week. All right, guys, that's all I have for you this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.